Hey, this is Danielle. Welcome to the free video. So today I wanted to talk about Amazon because Amazon has a split coming up. It's going to be trading at the split adjusted price on Monday, which means that tomorrow is going to be the last day that you can buy it for a nice price of $2,500 a share. So a couple things about Amazon. Number one, it did rally going into the split off of the $2,000 price point. So pretty decently. It also broke through the 34 EMA to the upside, which does lead me to believe that there's probably a little bit more upside potential here, especially because this is a bit of an outsized move. A bit of an outsized move normally occurs on a rally into a split and then post split. So usually these are pretty good for options trades. While I will note that two targets have already been met, 2400 and 2500, there's still one more target up here, which would be between 2700 and 2800. And I don't think it's out of the realm of possibility that Amazon could get there, especially in the week or two after the split, mainly because I would suspect if it follows a normal split pattern, that once it's only trading at 125 a share, more people are going to buy it, it's going to trade higher, that kind of thing. So when you're looking at are you crazy, or is this possible that it could be trading up at 2700 in a 15-day time frame? It has an expected move of $220. That is a regular normal move. That's not, oh, it's going crazy because of a split. That's just a regular Amazon move. Now, obviously, it'll be a split adjusted price divided by 20 after Monday, but just save me the math and just follow along, understanding that, if you buy options, you buy butterfly, like that's going to get split as well. So it doesn't really, it will get adjusted after the fact, and you don't have to worry too much about, wait a minute, but I bought a butterfly at 2700 and then now it's split, and because everything will be split. You'll have more options contracts, and also the price will be adjusted. So as of right now, 2700 I think is a reasonable target. And then I think that 2800 is more of a lotto target. So sometimes with these I will stack my butterflies because I'm not really sure how far it's going to go. When I say stack, means I'll do more than one. So for example, if I did the first one at 2700, I could do like a 2650, 2700, 2750. It's only going to cost, $3. It's pretty cheap, especially for, 15 days down the line. It is significantly out of the money. It's $150 out of the money, which is why it's so cheap. But the risk to reward is phenomenal. Now, if you widen it out a little bit more, and you say, okay, well, let's actually make it a little bit more reasonable. Let's make it a little wider. This is the instance in which you have a higher probability of shot of it working, and you also have a much wider range, so that not only if it does work would it be great, it would be much better than just a $50 wide fly, because the range is wider, which means you can make more money. So it costs more, you can make more. When you're paying $12.43 for a fly, and the fly is $100 wide, the very maximum you could make, or at least close it for, would be $100. So it's pretty significant. With those kind of flies, I don't really ever try to get it exactly to the pinning strike, which would be the center strike, but it happens sometimes, especially on something like Amazon that has such high open interest. So I do like the idea of targeting 2700. I'm also not against the idea of adding another one up at 2800. You just don't want to overlap your strikes. So if you're going to do that, make sure that if you're going to stack your flies, make sure you don't overlap your strikes, because that is when you will mess up both of your trades. So the reason for that is because, for example, this strike is long, and if you had another strike at that same value that was short, they would cancel each other out. So looking at this right here, it's $50 wide on each side. It's only going to cost you $1.93. It's one of those things where it's like, it is a lotto trade, it is low probability, but if this thing like takes off and rallies after the split, it's like a cha-ching, cha-ching moment. So I was going to look at doing both of those. Actually, like I said, I think the 2700 is higher probability, and the 2800 is more of a lotto trade. But in either case, that is how I'm looking at putting on some butterflies for the Amazon split. Now, if you're interested in learning more, I actually am going to have a class this weekend. I'm going to be focusing on identifying relative strength and weakness, and I'm also going to be focusing on this amazing tool that I've created called the Phoenix Finder. So basically what it does is it compares relative strength and weakness all in one spot so that you can identify which areas of the market you want to jump on, either to the long side or the short side. And it comes with this tool. It's pretty awesome. And if you want to learn more, go to simplertrading.com/diamond. So that's going to be DIAMOND. The reason for this is because it's called Diamonds in the Rough. Because, you know, in this crazy environment, you can find some diamonds if you know where you're looking. So that's about all I have for you tonight. I hope you have a great rest of your day, great rest of your day tomorrow as well, and I will see you next time.
Hey traders, it's Danielle here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to like and comment down below. Also, be sure to subscribe and click the bell icon so you will never miss the latest take from our trading experts. Did you know that we provide real-time trade alerts so that you know exactly what we're doing, exactly when we're doing it? Go to www.simplertrading.com to learn more. Good trading, and we'll see you in the next video.